The question of how much to put in an emergency fund and whether one truly needs it is an important question to ask. The importance of having an emergency fund cannot be overstated. It's a way for you to protect yourself against unexpected events, ensuring that you're well prepared to weather any storm that comes your way. Let's look into the 3 main reasons why an emergency fund is a necessity. The first reason is for unexpected expenses. Life is unpredictable. Maybe your car breaks down, or you need to make an emergency home repair, or perhaps you're faced with medical bills that come out of nowhere. An emergency fund is your safety net for these situations, ensuring you can cover these costs without breaking the bank. The next reason is the possibility of job loss or income reduction. As we've seen, global events can dramatically shake up the job market, and even the most secure jobs may face uncertainties. An emergency fund provides a financial cushion that softens the blow of job loss or income reduction. It allows you to cover your living expenses while you navigate through the challenging situation, buying you time to find another job or source of income without depleting your savings or going into debt. Speaking of debt, that brings us to our third reason. An emergency fund helps you avoid it. When faced with sudden financial challenges, it's easy to rely on credit cards or loans. But this can lead to a cycle of debt that's hard to get out of. An emergency fund provides a buffer, enabling you to cover expenses without resorting to borrowing. So, there you have it. An emergency fund is your financial safety net, protecting you from unforeseen expenses, job loss or income reduction, and the accumulation of debt. It provides peace of mind, knowing that you're prepared for whatever financial challenges life throws at you. Remember, it's not about if these situations will occur, it's about when. By having an emergency fund, you're not just preparing for the unknown, you're taking control of your financial future. An emergency fund isn't just a good idea, it's a necessity. Now the next question to consider is, how much should you put in your emergency fund? It's a great question, and the answer depends on you. First, you'll need to calculate your basic living expenses. This includes your rent or mortgage, utilities, groceries, insurance premiums, and any loan payments you might be making. These are the necessary costs that keep your life running smoothly. Once you've got a clear picture of your monthly expenses, you'll have a starting point. Now, a common rule of thumb when it comes to emergency funds is to save at least 6 months' worth of living expenses. But remember, this is just a guideline, not a one-size-fits-all answer. You'll need to consider factors such as your job stability and personal circumstances to determine the right amount for you. For example, if you've got a steady job in a stable industry, you might feel comfortable leaning towards the lower end of the 6-month spectrum. But if your job is less secure, or if you're self-employed, you may want to aim for the higher end. This gives you a larger safety net to fall back on in the event of sudden income loss. Special circumstances also play a role in determining the size of your emergency fund. If you have dependents, or if you're dealing with ongoing health issues, you might want to save more. This ensures you've got ample coverage for whatever life may throw your way. It's also worth considering any other financial protections you might have in place. For instance, if you have insurance coverage, you might feel comfortable with a slightly smaller emergency fund. And let's not forget, building an emergency fund is a process. If saving 6 months' worth of expenses is a lot to handle, start with a smaller goal, like 1 month's worth. Then, gradually, build from there. Remember, your emergency fund should reflect your individual circumstances. It's not about competing with others, but about creating a financial buffer that brings you peace of mind. So, take the time to assess your personal situation, calculate your living expenses, and start building your emergency fund today. You've determined the size of your fund. Now, how do you build and maintain it? Building and maintaining an emergency fund takes time, and the key to success is consistency. Set a monthly savings goal and treat it like a bill that needs to be paid each month. This non-negotiable commitment to your future self will help you steadily grow your fund over time. Now you might be thinking, what if I forget to save or spend the money elsewhere? That's where our second tip comes in. Automate your savings. Most banks and credit unions offer automatic transfers, which you can set up to move a specified amount from your checking account to your emergency fund each month. It's a simple, hands-off approach that ensures regular contributions to your fund, reducing the temptation to spend the money elsewhere. Next, let's talk about windfalls. These are unexpected financial gains like tax refunds, work bonuses, or even a lucky lottery ticket. While it's tempting to splurge, consider using these windfalls to give your emergency fund a significant boost. It's a good way to use the unexpected money, helping you reach your savings goal faster. Another tip is to put your emergency fund in a high-yield savings account. These accounts often offer better interest rates, helping your fund grow faster over time. As time goes on, it's important to periodically review and adjust the size of your emergency fund. Life is constantly changing, and so are your finances. Maybe your living expenses have increased or you've landed a new job with a higher salary. In such cases, you'll need to adjust your fund accordingly. Remember, the goal is to have enough to cover 6 months' worth of living expenses. Lastly, let's discuss high-interest debt. If you're juggling both saving for an emergency fund and paying off high-interest debt, it can feel like you're stuck between a rock and a hard place. But there's a strategy for this. Start by establishing a small emergency fund, say, enough to cover 1 month's worth of expenses. Then, shift your focus to aggressively pay down high-interest debt. Once that's under control, you can resume building your emergency fund. This approach saves you money in the long run by minimizing the amount of interest you'll pay. There you have it. 5 practical tips to build and maintain your emergency fund. Remember, it's not about how quickly you can save a large sum, but rather about the steady, consistent effort you put in over time. And don't forget to celebrate your progress along the way. Every step you take brings you closer to financial security and peace of mind.